Hello everyone, before starting today's video, let me wish everyone a very happy Diwali and a prosperous new year ahead. You might be like, we are talking about prosperity. And today, these days markets is not, behaving very nicely. It's going down the drain. We have almost lost more than 7% on Nifty from the top. From 26,000 plus levels, we are sub 24,000 levels right now. So why on earth, Rachana, are you talking about 30,000 in this video? There is a reason for it. Whenever we want to make big money, it is said that when everyone is fearful, you have to be greedy. And if you can do that, then there are great chances that you will be able to make good money in the market in a longer run. Okay. We say this, right? There is a light typically seen at the end of the tunnel. Right now, we are in that tunnel. We are in the dark patch right now. But like we also say, every cloud has a silver lining. We are not going to focus we are not going to focus on the dark clouds today. We are not going to focus on the darkness in the tunnel today. We are going to talk about the light towards the end of the tunnel. We are going to talk about the silver lining on that dark cloud today. In fact, there was a song, "Ye Hausla Kaise Jhuke," and in that, at the end of the verse, 2-3 lines go something like this: कि रुत ये ढल जाएगी, हिम्मत रंग लाएगी, सुबह फिर आएगी. So if you want to look at the bigger picture, this video is for you. So I understand that there could be some hiccups in the process, there could be some downfalls, some pullbacks in this process, but what we are going to focus on is the bigger picture. Hey folks, CA Rachana Ranade here, and I welcome you all to a very interesting video, because this is just the second time that I'm doing a Nifty prediction video, which was the first time that I did this video. That was back in November 2021, when Nifty was trading at 17,857, and at that time the PE of Nifty was 27. Do you know what was the prediction that I had done for Nifty? You only watch it. Look at the best case scenario now. Best cases, again, average of all these three is coming up to 23,788. That's way above where we stand today. Correct? Now what I'm doing is that now let me take a further average of what? Of the worst scenario, of the good scenario, and of the best case scenario. Average, vertical average is coming to 20,550. Okay. Is this still almost 11% from the current where we are currently right now? Yes, almost 11%, 12% upside from where we are right now. Didn't it seem like a far-fetched target at that time? When I was shooting the video, Nifty was around 17,800, and I had given a target of what? 23,788, almost 24,000. But believe it or not, it was achieved on 26th June 2024. The day itself was special. It was my birthday. Okay, you understand that, right? So it was a far-fetched target at that time, but within 2.5 years, this was achieved. The good target that I had given, so an achievable kind of a scenario, was 20,486. That was achieved on 4th December 2023 itself. And the worst case scenario, I had given a downside, that was so anyways achieved. So if you have a look at all these three targets which seemed beyond reachable, impossible category of targets, they were reached in like 2 years from the date of release of the video, and in the next 6 months the best target was achieved. So now what is the next big thing? By the thumbnail you might have guessed, is it 30,000? And if yes, then on what parameters is exactly what we are going to discuss in today's video. Now let me tell you the methodology that we are going to use today. So we are going to use two methodologies. One is P-based methodology, which is the price earning ratio based methodology. Second one is technical analysis based. Okay. So first let's start with PE based methodology. Now as I shoot the video, current Nifty PE is at 23.5. Now the interesting part here, you can also see in the image, is that the 10-year median Nifty PE is also at 23.5. So anyone who still feels that Nifty is excessively, the PE is like very high and it's in a bubble and this and that, 10-year Nifty PE average is also 23.5. So at Nifty level, bubble in valuations and this, that, I don't feel so. Okay. And in fact, like I told you, when I shot the video back in 2021, at that time Nifty PE was around 27. So in fact, we are lower as compared to 2021 in terms of P. Okay. Now, let's understand what is the EPS of Nifty. So first we'll get down to basic mathematics. Okay. So P by E, that is PE, PE ratio, how will it be calculated? Price by earnings. Okay. Now, do we already know the price? I'm taking Nifty current price at 25,000. Current price is Nifty. Nifty. Nifty at 25,000 right now, okay? As I shoot the video, it's around 24,850. I'm rounding it off to 25,000. Now PE, how much is that? 23.5. So what do we have to calculate? That is EPS. We have learned this in somewhere around 6th or 7th standard mathematics, how LHS and RHS move, and with this your EPS will come to 1064. Now when I shot the previous video back in 2021, at that time EPS was 665 for Nifty. So you can very well appreciate the fact that the rise in Nifty level is not just like a bubble or anything like that. Earnings have improved from 665 level of Nifty to 1064, Nifty IPS I'm talking about. So if that has improved, obviously it will get factored into the price, and also overall price for Nifty will improve, right? Now with all these things in place, now let's try and understand what could be the three scenarios: good case, better case and best case. And for that, have a look at this. Now if you see here, what have I done? Current EPS of Nifty is 1064. Correct? Now, if I take an EPS growth of 5%, 10% and 15% respectively for good, better and best case scenarios, what am I doing? See, 1064 is the current EPS. If I add 5% to 1064, that comes to 1117.2. If I add 10% to 1064, that will come to 1170.4. And if I add 15% to the current EPS, it will come to 1223.6. So these are the EPS targets. Now, current PE level, as I shoot the video, is 23.5. But what if there is a PE re-rating? Okay. If the PE re-rating goes to 25 or goes to 27 is what I've considered for better case and best case scenarios. With these levels, now what happens, understand. Again, going back to the formula, PE is equal to P by E. Now in our example, do we already know what is PE? What is the PE that we are forecasting? Yes, that is nothing but 23.5, 25 and 27 in these three scenarios. Have we also taken out our EPS targets in all these three scenarios? Yes. Now it's just putting it into the formula so that we can get a Nifty target price. In a good case scenario, it can go to 26,254. In a better case scenario, 29,260. And in a best case scenario, it can go to 33,037. Now even if I take an average of this, it will go to 29,517. So round it off to 30,000. But wait, if you feel that, Rachana, 15% growth in EPS, that seems outrageous, too much. If that is the case, that is not the case. Why? Because if you were to check the EPS growth on a YOY basis, it is already around 20%. I have not even considered that as a case. Okay. So I hope with this you will be still able to appreciate the fact that 30,000 seems to be a fair enough bet. What say? Well, before we move on, I would just like to remind you about this festival of lights, which is Diwali. Typically during Diwali, we pray to goddess Lakshmi for prosperity. But I think only prayers are not enough. We need to have some plan of action, so that plan of action plus prayers can give you some good results. What could be the plan of action for this Diwali? This Diwali, promise yourself that you will be a better version of yourself within the next few months. But how? For that, you should upskill yourself and learn something new about stock markets. And for that, you can visit our website, rachanaranade.com. If you want to be a good investor in stock markets, 3 courses are a must for you. One is basics of stock market, one is fundamental analysis, and one is technical analysis. If you feel that I'm not going to invest in stock markets, mutual funds are good enough for me. I need to know some basics about money management and mutual funds, and I'm sorted. If you're of that category, then 2 courses are important for you. One is Magic of Mutual Funds, and the second one is Mastering Money Management. And if you feel that I know all this stuff, I need to step up my knowledge further, then we have a course on futures and options, as well as art of value investing. And to top this up, because we are talking about prosperity, we are talking about wealth, just to save on some money and to give you some great deals, I've come up with 2 coupon codes. One is Diwali if you are enrolling for any single course, and if you are enrolling for combination of courses, we have the coupon code RR Combo. So don't forget to use these codes while you enroll for any of our courses, and to level up your investing knowledge. Moving on with the second methodology, which is based on technical analysis. Just to save on some time, I have directly taken screenshots so that we can, move a little bit fast. Again, we are going to do 3 scenarios: good scenario, better scenario, and best scenario. And for that, have a look at this. Now, if you see here, I have taken a screenshot of the weekly chart, okay? And if I were to join these tops, I understand that, okay, this is one top somewhere around 2023. This is the second top we can see in 2024. The market actually, this was the resistance level is what we can say. It broke above it. It has retested it once. again retesting it as I shoot the video. But what I've done, if it were to sustain above this, or if it were to go in this similar traction, then what could happen in November 2025? That will be 1 year later, right? It could ideally reach a level of 27,481. I've taken a screenshot taking it here. This line, this is the cursor, is where I've taken this screenshot. So even if this line were to continue in the same traction, 1 year later it should be around 27,481, roughly 27,500. Okay. Now let's go to a better case scenario. So what I've done here is that instead of joining this, I have joined this top. So this is the first point, and so this will be the point. So now you'll be able to see this very clearly. This was around 22, right? So this is the top that I've considered. This top and this top, I've taken it for better case, and for good case I've taken these inner tops. Okay, so now what will happen if this line were to extend 1 year later, that is in November 2025, somewhere here, Nifty could reach 29,146. Okay, so can that also be a decent enough target? Yes, ideally yes. But now what is the best case scenario? For that I've done a fib retracement or a fib extension basically. Now why? Because there is no more top for me to connect, right? So what I've done in fib extension, what you do typically is that you connect a low. The lowest most that I've connected is the COVID low. Then I've taken the highest point post this rally. Okay, this was pre-Russia-Ukraine war, and then we saw the lowest point during the Russia-Ukraine war, right? So you click this point, then this point, and then this point, and when you have taken fib extension, automatically it gives us the targets which are yet to achieve as well. So here you can see this is a 0.681, this is a 1, and here you can see the 1.4 extension comes to 30,867. Now what do we do? Again, we will have a summary of this. So for that, have a look at this. 3 scenarios: good, better, and best. So you can see here 27,000 target for the middle trend line. The top trend line that I drew was 29,000 target. The fib extension was at 30,800. And if I were to do an average of all these, it would come to around 29,079, 29,000 chalo. So still pretty much close to the 30,000 mark. So I hope based on technical analysis you have understood it's coming to around 29,000. Based on P, it's coming to around 30,000. So these are the targets as per technical analysis. And now let's come to the grand finale where we do an average of averages. Okay, and what we are going to do, we are going to do the average of good, better, best, and for both the scenarios, be it technical analysis or PE based analysis. Okay, so for that, have a look at this. So what we have done, first let's map the targets that we have taken based on technical analysis. These are the 3 targets. Now let's map the targets that we had calculated based on PE. And these are the 3 averages. Now let's do a horizontal average for each. So in good case scenario, the average comes up to 26,755. Better case scenario, 29,222. And best case scenario comes to 31,919. And an average of all these 3 averages comes to 29,299, which I have rounded it off to 30,000. Okay. Now, I mean, if you remember last time when I'd done the video, it took 2.5 years to achieve these targets. Now you have to tell me in the comment section, what do you feel? When will this target of 29,299 or rounding it off 30,000 target, when will that be achieved? Now that you can see, Nifty, which seemed at an impossible level, which we discussed in 2021 and which was achieved in 2.5 years. Right now, as I shoot the video, I'm sure that many of you might be like, 30,000 is like very difficult. But you will only tell me that, it was achieved in no time. No time is not like 1 week or 1 month or less than a year. I don't feel so. May take a shade more than 1 year. Somewhere between 1 to 2 years is what I have a gut feeling. But let's see how things pan out. Big question is, are the retail individual investors still participating or not, or what has been their trend? If I were to quickly tell you about the trend from 2020 to 2024, the demat accounts have skyrocketed from 4 crores to 15 crores. So that's nearly like a 4x jump. Plus, if you see, so this is a direct way of investing in the stock market. An indirect route of investing in the stock market could be through the SIP route. And if I were to pull out data from 2016 to 17, the annual SIP number in rupees in crores was 43,921. Let's round it off to 44,000. That number has moved up to 1,99,219 crores in FY 23-24. So if I were to just again tell you, from roughly 50,000 crores to roughly 2 lakh crores. Again, that's a jump of 4x in the SIP yearly contribution also. And the best number right now, you can see FY 24-25, that's like barely a half yearly data, which totals to 1,33,925. So this number, if I were to double up, it could go almost to 2.6 lakh crores. So I hope we have understood that retail participants are even now very much, they're aware of the overall market situation, and they are also participating with good numbers in volume as well as in value. I hope you too are invested in this market. I know that there are some concerns which are going right now. It could be the war situation. It could be something like the quarterly results that are coming up. But don't worry. It's always said that bad times don't last forever. But you have to stay invested so that you enjoy the sweet fruits of this market. So I hope you will keep on investing in a very disciplined manner in the coming months as well. If you did find a lot of value in today's video, don't forget to smash the like button. Don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye.